Welcome back to Making Money Matter, ladies and gentlemen. My name is Kerry Stevenson, and today it's all about making money matter. And one of the ways we're going to do that is talking about real money. What's real money? It's gold. So I've asked Marc Ducler. He is the Managing Director of Astral Resources. ASX code is AAR. Now, Astral have got the Mandilla project over in Western Australia. It's in the Kalgoorlie-Kambalda region. Really interesting. And what these guys are doing is increasing the resource. There is an announcement out today, which I'll let Marc talk about, but also he will be presenting at the Australian Gold Conference. So you can actually go and talk to him in person. He'll be presenting on day 2, which is Wednesday, the 30th of August at 2:30 in the afternoon. But in the meantime, these results that have come out, I thought were too important to wait until August. So Marc, thanks for joining me today. Great to see you.
Thanks, Gary. Thanks for having us on.
Well, look, I kind of told them a little bit about you guys. Now, one thing I didn't mention actually was the team that you've brought over to Astral actually did really well for shareholders back when you had Egan Street Resources, which was bought by Silver Lake, making a lot of shareholders very happy. This is the same team that is now at Astral Resources, correct?
Yeah, and I do think that's a pretty important differentiator. I mean, we IPO'd a company in September 2016. We took a small asset, we grew it to 500,000 ounces at circa 10, 11 grams per tonne, got it fully permitted. We were looking for debt funding, our DFS studies were out, and then Silver Lake came and bought us. And the most important thing about all of that is the work was done to a technical level of detail that supported that due diligence, supported that transaction, which was a 2.5 times return for our shareholders at the time. And more so than that, Silver Lake were actually mining our plan within 6 months of getting the keys to that Rosso Gold project. So it is very much the same team, and we are working to that same level of quality with the Mandilla Gold project here at Astral.
Well, tell us about Mandilla, because you've had it not that long, but you've been constantly working at it, drilling it, and I think more importantly, doing the technical work to underlay it so that you're doing it in a systematic way so that you can, again, it's all about, I think for you, it's all about making sure that shareholders get value in the long term. Absolutely.
And yeah, so Mandilla has grown from a small 30,000 ounce deposit to 1.03 million ounces as of December last year. We're lining up our geology consultants cube to recut that resource for this June quarter. So we look to have it towards the end of June, early July this year as a fresh update. And last year we added 250,000 ounces at $16 an ounce worth of discovery cost. And like from an industry perspective, $16 an ounce when it's worth $3,000 an ounce is a really good way to add value to your business when it's costing you $16 for every $3,000 ounce of gold that you're finding. And so we're very keen to continue to grow it.
Marc, I want to know how you found the deposit. Like, I know you didn't initially find it, but why did you like Mandilla so much? And it seems to me that you've, as you said, when you first got your hands on it, it was 30,000 ounces. You've grown that substantially. I want to know 2 things. 1, why Mandilla? And 2, how have you gone about growing it in such a way in a fairly short period of time?
Yeah, well, location is certainly one of the top priorities for us, and location relative to other infrastructure. So when our Egan Street business was taken up by Silver Lake, that was December 2019, we actually got a call and we were asked if we wanted to bring the team into Astral Resources. And so we had a look ourselves under the bonnet of this company and looked specifically at the Mandilla Gold project and looked at its location and what sort of scale we thought we'd be able to get it to, and realised that if we got it to that scale, in our mind, there was just no way that we wouldn't deliver value for our shareholders. And purely that was the basis for taking it on.
Was it pretty tough to take it on? Because you said December 2019. Well, of course, we know what happened in 2020. Was it pretty tough to take a project on as COVID hit?
Oh, the first...
Oh, have you forgotten about that, have you?
No, not at all. I never will, actually. The first capital raise was hugely challenging, and that's where you do rely on your past successes to get you through some of those difficult hurdles. So in that instance, I was actually looking to do the first substantial raise in Astral Resources for probably a number of years. I mean, the company had managed to continue its existence and drill enough holes to maintain its tenure, but probably hadn't grabbed significant traction and did a sufficient capital raise to really go out and drill the project properly. And we have been drilling 40, 50,000 meters a year since we've come on board. And this year we're targeting probably 50 to 60,000 meters again this year as well. Yeah, and that first capital raise in March, we had a really solid book of bids as we went to build our placement. And then that Friday in March was the day that the US market absolutely capitulated. And we were in trading hold on the Monday, and the Australian market was in free fall. And a lot of the people that had committed into the placement, yeah, those bids evaporated. And look, that's just the timing. That's the nature of the business that we're in. And I was really fortunate I could rely on a couple of key people that made money out of us at Egan Street, that trusted the skill set of the team and our ability to do it again. And they came into that placement with a pretty firm bid, and then I was able to build the rest of the book around it. So yeah, there were certainly some challenges thrown up in COVID, but particularly the timing of our first major raise couldn't have been any worse, because after that, the market actually flew, to be honest.
Absolutely, yeah, it did.
It flew all the way through till November, and gold producers and mid-tiers peaked around mid-November 2020. And now they're, on a really positive note, now those mid-tiers and majors are starting to get a bit more love now. And I think it's inevitable that that's going to trickle down into the junior space as well.
And I think that's really important for those of you that are watching out there, because I quite often get people saying, I don't understand gold. I don't know how to get involved with gold. Well, let me tell you, first of all, this is not financial advice. Do your own due diligence. Call Mark, pick up the phone and give him a call and say, why should I get involved with Astral Resources? I'm sure he'd love to hear from you. But I think it's important for people to note that, as Mark just said, as the market comes back to life, and we got to say, don't we, Mark, that, you know, gold has been a little bit unloved, but I really do think that, as you say, the producers are coming, and it trickles down. So the reason I was keen to have you on board today to chat to our audience is because you've got some pretty interesting results that have come out, announcement today at your project. Can you just tell us a little bit about some of the highlights of that, and has that encouraged you in continuing the drilling where you are?
Yeah, look, I was actually thinking, geez, we do need to talk about this announcement, don't we? So thanks for bringing me back on track. Look, we foreshadowed early in the year that following that great resource update in December of 2022, that we were going to be drilling aggressively, and we have been. We've been drilling with 2 rigs since January of this year. And the very first diamond hole we put into Mandilla this year, which was MDRCD 660, we actually put a long projection of that into one of our announcements. I think it was mid-March, to say, look, from our perspective, this looks like a fantastic hole. There was visible gold seen, significant amounts of visible gold seen down the hole. And depending on the level of knowledge that your listeners have, I mean, when you're drilling diamond core, you're effectively getting like a pipe of solid rock up the hole, and you're bringing that up to the surface, and you're obviously logging it. You're visually inspecting it, then you're cutting it, and you're sending half of that core to the lab for assay. And obviously when we're logging it, our geos have much better eyes than I do, and they're seeing the visible gold, and we have visible gold throughout that hole, which ended up giving us over 250 gram meters of gold down the length of MDRCD 660. So we had a 40 odd meter intersection at 1.9 grams per ton, a 38 meter intersection at 2.1 grams per ton, another 25 meters at 1.2 or something like that. So the length of that hole had seriously economic quantities of gold in it, and it's probably one of our top 10 holes that we've had to date in the project. So it is certainly pointing to additional growth, and we are still drilling at Thea at the moment. And whilst we don't have any more results at this point in time, some of the indicators that we're seeing, we're more than happy with the drilling that we're doing and our ability to continue to grow Mandilla, and specifically Thea, which is the big deposit that we have there.
So what you're saying is that this is an extension to the current Thea deposit. So it,
Yeah, 100%. So Thea is 878,000 ounces in one deposit, estimated within a $2,500 gold price. And it is important for your viewers to understand resources in relation to how they're being estimated by the companies that they're looking to invest in. So from my perspective, if you want to be confident that those resources are genuine resources that have the genuine opportunity for economic extraction, then you should be, for open pit resources, you should be estimating them in an open pit that says, hey, these are all the ounces I have in the ground. And when I mine a theoretical shell based on a gold price that is giving me $2,500 worth of revenue, I can theoretically mine that pit shell and theoretically recover those ounces. Okay. Because you can have ounces spread from one end of your lease to the other, but if they don't happen to come together in a concentration that allows you to excavate a pit and make money, then those ounces are never going to generate a return. And we're here to generate a return for our shareholders, which is why we estimate them within a gold price shell environment, which gives us very clear line of sight that these things are going to be valuable.
I really appreciated you talking about it in that way, because there are those out there that will be watching. I know all that, but you know what? There's a lot of people out there that are keen to understand, and you did that in such a really interesting way. I'm going to ask you one other very simple question here, Mark. MD RCD 660. That's the name of the hole they drilled, ladies and gentlemen, that Mark just spoke about, where they got that visible gold. Why the MD RCD 660? Can't you just call it drill hole number one?
Yeah, we've probably got 80 kilometers worth of drilling in the database now. So you've got to have a naming convention that's going to stand the test of time. And so for Mandilla, it's MD for Mandilla. And then we start with the RC, realistically, given we're doing RC holes. And then in the event that we choose to finish it with a diamond tail, or if it's going to become a diamond hole, then we put D on the end of it. So MD, RC, D. It's not my naming convention. There's much more clever people than me that work in our business, but there is a method to the madness. For sure.
All right. Well, I just wanted to clear that up as well. All right. Talk to us about the strategy going forward. I'm speaking to you coming up towards the end of April 2023. What's the strategy, apart from coming to the gold conference in August, what's the strategy for the rest of the year for Astral? Where's the value accretion?
Yeah, so we will continue to drill. So we still have 2 drill rigs on site at the moment. The sample turnaround time is actually really good for us. So in this gold space, using the photon analysis, which is a completely different topic in terms of how you decide to analyze for gold, but we use photon analysis. So we'll be drilling. We are lining up the resources to cut another resource for Mandilla in June, and bearing in mind that you think about at Thea, we did 6,600 meters at Thea, and we added 220,000 ounces last year, right? And by the end of June, we would have done close to 30,000 meters. Now, it's not going to be, wow, 6,000 meters was 220,000 ounces, therefore 30,000 meters. It's not going to be that great. We certainly think we're going to have a strong increase in resources, because I think the data is looking pretty good to date. So a new resource in June, and we're doing all the work in the background to put forward a financial study that really allows the market to realize the value of Mandilla. And so the way we'll do that is we'll use a $2,000 gold price to redesign those ounces that are in the ground. Okay. And then rather than it being just a high-level theoretical shell, you then start to do a very detailed design and schedule to the point where you go and you get the productivity numbers from the mining contractor that are likely to bid on the contract. You get the very latest pricing that is available in the industry. You update the costs to build. For us, we'd be looking at a circa 2.5 million tonne per annum process plant. And then you look at the operational costs, diesel, reagents, cyanide, lime, grinding meter, you name it. We'll put all that together in a document, as well as confirming the flora and fauna studies that we've already done, looking at geotechnical work for tailings storage facilities, as well as geotechnical work to understand the pit wall dimensions in terms of how steep we can have those pit walls. All of that will come together, and we'll push out that study in September. And the good thing is, looking at some of our, I'll call them peers in the market, but I'm probably being a bit generous to myself and doing those guys a disservice. But like Capricorn put out a pre-feasibility on Mount Gibson. It was this week, actually, because today, yeah, it was this week. And they've used $2,750 as a gold price assumption for revenue, because the gold price is currently close to 3,000. And we've actually been doing our back of the envelope calculations using 2,360. So it's a 1,700 US, 72-cent exchange rate to be specific. And we're comfortable that we've actually got the potential for quite a profitable business at 2,360. Like, in terms of, we're not in a position where we can release that data set because we need to refresh all of that. And that's the work that we'll be doing for September quarter 3 calendar year. But if we're using gold assumptions of 2,750, then we've got a cracking project. And I'm really looking forward to putting that data set out to the market for the September quarter. I mean, I'll push hard to get it ready for your gold conference.
Oh, that's music to my ears. I think it's also important for people to know where the project's located, because there's a lot of projects out there, and some of them are what we like to call stranded assets. But the Mandilla Gold Project is right in the heart of the Kalgoorlie, Kambalda. And ladies and gentlemen, just to give you an idea, I think the Mandilla Gold Project, correct me if I'm wrong, is about 70 kilometers from Kalgoorlie and about 20 from Kambalda. So in other words, the reason I'm bringing it up, Mark, is you've got a lot of infrastructure around you. You mentioned building a plant. Do you need to?
It's an interesting question. Look, the short answer is probably no. The part of our journey that we can control is absolutely to justify that we can build our own process plant. And I think even before we justify that we can do that, I think we are certainly going to be of interest to our neighbours that have big, hungry mills. So without a doubt. So in our neighbourhood, there's two companies. There's Goldfields Limited, which is obviously a multinational company that in Australia produces 1 million ounces per annum at $1,600, $1,500 to $1,600 an ounce, all in costs. So they're a business that's generating probably $1 billion a year of free cash flow. It's a fantastic business. And then you've got Karora, which is TSX listed, that's got the Higginsville and Beta Hunt mining operations, and they've got processing plants at Higginsville and Lakewood, which is just south of Kalgoorlie. So there's a couple of likely people that I think are going to see the growth in Mandilla and fundamentally believe that probably will look good in their portfolio at some point. But having said that, I can't control that outcome. All I can do is demonstrate our ability to build our own, and that's what we will focus on. And to date, it's certainly looking as if we have that ability to do so. And if there was, look, whether it's a takeout situation or some sort of asset level transaction or toll treating or vending in, there's a whole raft of different scenarios. And from our perspective, we're certainly not precious on our jobs. We're keen on doing what actually generates the best amount of value for our shareholders, because I'm a shareholder. I've invested in this company. I'm going to continue to invest in this company, and I want a profitable outcome.
Love it. That's a great way to finish up, because we are running out of time. But Mark, I'd love to finish these up by wrapping it all up, if you like, and saying, for our audience out there, give them 3 reasons. A lot of companies out there. Why do you think Astral stand out right now?
So I've been really mindful of time. I think lots of good assets can be destroyed by really poor management teams, and some poor assets can be made successful by some fantastic management teams. Like, I think fantastic is a strong word, so I don't want to oversell, but we are certainly competent. We've been successful before, and we didn't go into this to not be successful again. So certainly the stewardship that we'll provide, I think, is going to be fantastic. The location of the asset, it's a great location. We would be one of the best undeveloped projects in the Eastern Goldfields, and the Eastern Goldfields is the premier district to be in for gold, and I would suggest we'd be one of the best undeveloped projects in the goldfields at the moment, in the Eastern Goldfields. And thirdly, well, I think gold from a sentiment perspective is a great place to be. These ounces are in the ground. These ounces will have an intrinsic value, and so I think downside is certainly limited. We're on an EV per ounce basis of $40-$45 an ounce, and I think compared to our peers, we're a very cheap entry into the gold space, one that has a clear path to how we would realise value for our shareholders.
Well, let's hope lots of those shareholders are going to come along and meet you in person at the gold conference in late August. But in the meantime, sounds like there's going to be a lot of news flow to come. Marc, thanks so much for joining me on Making Money Matter today. We'll see you again soon.
Cheers. Thanks very much, Gary. We'll see you soon. Bye.